Welcome to today's deep dive. We're going to be talking all about GIC Re. That's the General Insurance Corporation of India.
Oh, yeah.
They're a big player in the world of reinsurance.
Huge.
Yeah, huge.
Yeah.
And we're going to unpack their history, their financials, and what the future might have in store for them.
I think one of the really important things to think about with GIC Re is their role as India's national reinsurer.
Yeah.
So when you think about India's economy
Right.
and just how fast it's growing,
Mm-hmm.
GIC Re is kind of like the safety net for all the other insurance companies in India.
Exactly. It's like insurance for insurance companies.
That's right.
So for anyone who might not know,
Right.
reinsurance basically helps spread the risk.
Right.
So if some major event happens,
Yeah.
one company isn't left, holding all the risk.
Right. That's why GIC Re's story is so interesting, because they were established way back in 1972.
Wow.
So they've really seen a lot of changes in the Indian economy and the insurance industry.
Okay, so let's start with that, with
Okay.
their history, and then kind of go from there and see how they fit into this bigger picture of the insurance world.
Sure. So GIC Re was formed by combining all the reinsurance businesses of 107 different insurers.
Wow, that's a lot.
It is, that were all nationalized by the Indian government back in the early 1970s.
So all these companies came together.
Yeah, it was a huge shift in the Indian insurance landscape.
Right.
And then fast forward to 2015, they launched this India Nuclear Insurance Pool,
Okay.
which is, pretty important when you think about India's growing energy needs.
So they're basically insuring the insurers of nuclear power plants.
Yeah, pretty high stakes.
Yeah, very high stakes.
And then in 2017, they went public and got listed on the Bombay Stock Exchange.
Okay.
So that was a big step.
So it's a public company, but the government still owns a majority of it.
Yeah, they still hold a majority stake, so
That's interesting.
it is. It shows how important they are to the country.
Right.
But here's another interesting thing. GIC Re, they're not just an Indian player. They've got branches and subsidiaries all over the world.
Really? So they're competing on a global scale.
They are. It just goes to show how much expertise they've developed, over the years,
Yeah.
and the amount of trust they've built with clients around the world.
So let's move on to that industry overview.
Okay.
What kind of market are they playing in?
Let's start with the life insurance industry in India.
Okay.
It's been growing pretty steadily, about 2% over the last year, and that's generated something like 3.78 lakh crore
Wow.
in new business premiums.
So that 2% growth, that's a huge potential market for GIC Re, right? Because they're reinsuring those companies.
Exactly. So it seems like they're in a good spot to take advantage of all this growth.
Yeah.
Now, the LIC, the Life Insurance Corporation of India, is still the big player,
Right.
but those private companies are gaining some ground too.
Okay.
So it's becoming more competitive.
That's usually good for consumers.
It is, right.
Better products.
Yeah, better products and better services.
Yeah. Okay, so that's life insurance. What about reinsurance globally?
Globally, there's this kind of mix of optimism and caution going on.
Okay.
S&P Global Ratings, one of the big rating agencies, they actually just recently changed their outlook for global reinsurers from negative to stable.
So is that a good thing?
That's a good sign. It kind of hints that there might be a recovery on the way.
So things are looking up.
Yeah. But there's also that caution I mentioned.
Okay.
So another big rating agency, AM Best, they kept their outlook at stable, which is a little more cautious,
Let's see.
They're saying that the increases we've been seeing in reinsurance rates,
Like,
they might not be as high in 2024 as they have been the past couple of years.
so it's kind of a wait-and-see approach.
Yeah, reinsurers like GIC Re are going to have to be smart about how they navigate all of this.
For sure.
Yeah.
Now, let's dig into some of those key performance indicators, those KPIs,
Okay.
that can tell us more about how GIC Re is actually doing.
Sounds good.
So let's start with premium growth. That's always a good indicator
Yeah.
of, how much business a company is writing.
It shows how much money they're bringing in.
Right.
From, the premiums that they charge for reinsurance.
Exactly. Now, when we look at GIC Re's gross written premiums, both domestically and internationally, what trends are we seeing?
We're seeing some pretty interesting things. For example, their Malaysian branch
Okay.
has seen a big jump in premiums. They wrote RM 600.53 million.
Wow.
That's a big increase.
That's great. That's really good.
It is. But you have to remember, GIC Re operates in a lot of different countries, right?
Sure.
Across lots of lines of business.
Yeah.
So the picture isn't always, completely uniform. For example, Canindi Assurance, where GIC Re has about a 9.19% stake, actually saw their net profit decrease compared to last year.
So even within a successful company, there are always going to be areas that need some attention.
For sure. Now let's talk about the combined ratio.
Okay.
This is a big one.
What does that tell us?
It tells us how efficiently an insurer is underwriting its business.
So basically how much money they're making.
Yeah, from their main business of providing insurance.
And how are they doing on that front?
Well, for GIC Re, things look good, especially in segments like Credit Re.
Okay.
Their combined ratio in that area dropped from 58.6% to 51%.
That's a big drop.
It is. It means they're getting more profitable in that line of business.
That's great.
Now, another really important thing to consider when we talk about an insurance company is investment income.
Right.
You know, they don't just collect premiums.
Right.
They also invest that money
Of course.
to make more money.
Yeah, so understanding how they manage that investment portfolio, that's key.
Right. And GIC Re has a big investment portfolio.
Right.
Like any smart insurer, they invest in lots of different assets, from government securities to stakes in other companies, like we talked about with Canada Assurance.
So diversification is important to them.
Definitely. Now, let's move on to solvency margin. This is a critical metric that makes sure an insurer has enough capital on hand to cover potential claims.
So it's about ensuring their financial stability.
Right, making sure they can pay out if they need to.
Exactly. And how does GIC Re measure up in terms of solvency?
They take this very seriously. They comply with all the regulatory requirements.
Okay.
Which is good, you know, it gives you confidence in their financial strength.
It does. They also have an internal audit department.
Yeah.
And they bring in outside audit firms to make sure everything's legit.
That's important.
It is. Especially when you're dealing with a company managing such massive amounts of money.
Speaking of money, let's talk about profitability.
Okay.
Looking at those trends in profit after tax, PAT, and their operational efficiency can give us a really good understanding of where GIC Re is excelling.
It shows us which parts of their business are driving the profits, right?
Right. And for GIC Re, segments like fire and engineering are showing big profits.
Oh, wow. So they're doing well in those areas.
Yeah. It seems like they have real expertise there.
It sounds like GIC Re has built a pretty strong foundation. But what about the risks they face? I mean, every business has challenges, right?
Oh, absolutely. And in the insurance world, you know, understanding risk is everything.
So what are some of those risks that are on GIC Re's radar?
Well, operating in a global landscape like they do, they face a lot of different risks.
Right.
Climate change is a big one.
Yeah. You can't ignore that these days.
No, you can't. Think about the increasing frequency of natural disasters, the severity of them,
Scary thought.
and how that could affect their claims.
It's a lot to consider.
It is, and it's not just climate change.
Right. What about all this stuff happening in the digital world?
Cyber attacks are becoming more and more common,
Yeah.
more sophisticated.
Right.
And that poses a whole new set of challenges for insurers.
So is GIC Re doing anything to address these cyber risks?
Yeah, they're taking what they call a careful approach. They're focusing on collecting data and analyzing it to really understand these cyber risks before they, you know, expand their offerings too much in that area.
That seems like a smart move.
It is. It's a fast-changing field.
Right.
Rushing in without really understanding the risks could backfire.
Big time. And then, of course, there's the overall economic climate.
Right.
I mean, we talked about how growth might be slowing down globally. That could definitely have an impact on GIC Re's investments. Right?
Absolutely. And on their clients' businesses.
So they need to be prepared for, you know, a range of different economic scenarios.
It's a lot to manage.
It is. But from what we've seen, it sounds like they have a pretty solid risk management framework in place.
They do.
And they're always adapting to these new situations, which is good.
That's really key for their long-term success.
Definitely. Now, GIC Re isn't just all about business.
Yeah.
They're also committed to corporate social responsibility, CSR.
Yeah.
I always like to see that in companies.
Me too. It shows they're not just thinking about profits. You know, they're thinking about the impact they have on society.
So what are some of the ways GIC Re is giving back?
Well, they've given to a bunch of different projects.
Okay.
For example, they support the Leprosy Mission Trust India,
Okay.
which provides reconstructive surgery for leprosy patients.
Wow, that's incredible
It is.
that they're using their resources to, you know, help people like that.
And they also work with the Lifeline Express.
Yeah.
They've partnered with the Impact India Foundation to equip it.
What is the Lifeline Express?
It's basically a hospital on a train.
Wow.
It goes to all these remote areas of India,
That's so cool.
brings healthcare to people who might not have access to it otherwise.
Like taking healthcare on the road.
Right. And then there's also their support for Pride India's Shashwatgram project,
Okay.
which focuses on lifting up those rural communities.
So they're really involved in a lot of different things.
Yeah, all these initiatives show how committed they are to making a positive impact.
It's great to see a company of that size, really prioritizing social good.
It is.
So we've covered a lot in this first part.
We have.
We've looked at their history, their place in this, global insurance world, and some of those key performance indicators. And we've seen that they're not just about the numbers, right? That commitment to social responsibility shows that they're a company with a conscience.
Definitely. Stay tuned for part 2, where we're going to dive into GIC Re's international ventures.
Okay.
And we'll take a closer look at their financial statements.
It's going to be an exciting journey.
It is. We'll be back soon.
Welcome back to our deep dive on GIC Re.
It's good to be back.
So last time we talked about their history, their position in the Indian insurance market.
Right.
And some of those key indicators of how they're doing financially.
Exactly. We saw that they're a real major force in the global reinsurance industry.
Yeah, they are.
Now, let's take a little closer look at some of those financial indicators.
Okay.
Starting with premium growth.
Yeah, premium growth. That's so important.
It's crucial, right? It's basically the lifeblood of any insurance company.
It shows you how much new business they're bringing in.
Exactly. How much they're attracting new clients, building that trust.
Right. We talked about their performance in Malaysia, which was really impressive.
It was.
But let's zoom out a little bit. Look at the broader picture.
Okay.
What kind of trends are we seeing in GIC Re's gross written premiums, both in India and around the world?
Well, in the domestic market, the fire insurance segment, that's been a big winner for them.
Fire insurance.
Yeah, they've seen some really solid growth there.
I guess that makes sense with the Indian economy bidding, right? More businesses popping up, more need for fire insurance.
Yeah, you're right. But there's a little twist here.
Okay.
The removal of those minimum rate conditions from the reinsurance treaties, that could affect future growth.
Oh, so there's more competition now.
Exactly. It's a more level playing field, which might put some pressure on their premium growth in the fire insurance market. So they'll have to stay on their toes, be competitive.
For sure.
Yeah.
What about internationally? Where are they seeing the biggest growth?
They're smart. They're really targeting those emerging markets.
Okay.
The ones with a lot of growth potential, especially in Asia and Africa.
Makes sense. High growth, but probably higher risk too, right?
Exactly. It's a balancing act, right? You got to seize those opportunities while being super careful about managing the risk.
That's where their expertise in risk management comes in.
Right. They got to assess the political situation, the economic conditions, the whole landscape.
Before they jump in.
Absolutely.
Yeah.
Okay, now let's switch gears a bit and talk about the combined ratio.
Okay, remind me what that is again.
So the combined ratio, it tells us how efficiently GIC Re is actually underwriting its business.
So how good they are at their core business, basically.
Yeah. Are they managing those claims effectively? Are their expenses under control? Are they charging the right premiums?
And they have a good track record there, right?
Yeah.
We talked about their improvement in that credit reinsurance segment.
Right. That was a positive sign.
But how does their overall combined ratio stack up against the rest of the industry, both in India and internationally?
They're right in line with the industry averages, which shows they're doing a good job with underwriting.
That's reassuring.
Yeah. But they can't get complacent, right? As they grow into those new markets, new lines of business, maintaining that healthy combined ratio is going to be key.
Definitely. Each new venture brings its own challenges.
For sure.
Okay, let's move on to GIC Re's investment portfolio. We know they've got this huge portfolio.
Yeah, massive.
But how are they allocating all those assets? And what kind of returns are they seeing?
Well, their investment strategy is all about balancing risk and reward.
Okay.
So they have a big chunk allocated to government securities, which gives them that nice, stable base,
Steady income.
Right, steady income. But they also invest in things like equities, other assets that have the potential for higher growth.
So they're not putting all their eggs in one basket.
Exactly. It's that core satellite approach to managing their portfolio.
Right. Mix of stability and growth. But what about the impact of interest rates? They've been going up all over the world.
It's definitely something they're keeping a close eye on.
Yeah, higher interest rates, they can impact the value of their investments, right? Like their bonds.
It's a double-edged sword, right? Higher rates mean potentially higher returns on new investments.
Right.
But they can also shrink the value of their existing holdings.
So it's a delicate balancing act.
Exactly. It takes careful management.
Let's talk about solvency margin again.
Okay.
This is such a crucial indicator of GIC Re's financial strength, right? It shows whether they have enough capital to cover potential losses.
Right. It's a measure of confidence for investors, for regulators.
And GIC Re's been doing well there, right? They've been exceeding those regulatory minimums.
They have. They consistently maintain a really healthy solvency ratio, which is great.
That's good to hear. It means they're taking a responsible approach.
Exactly. They're prepared.
Now let's talk about their overall profitability.
Okay.
We saw those strong profits in fire and engineering, but what about the bigger picture? What factors are playing into their overall profitability?
Well, they've consistently been in the black, which is a great sign.
Yeah.
It shows that their underwriting practices are solid, their investments are performing well,
Right.
and they're keeping those expenses in check.
Sounds like a well-oiled machine.
But, the reinsurance market, it's competitive.
Yeah.
And the global economic situation, it's unpredictable.
Right. So they can't just rest on their laurels.
Exactly. They've got to keep pushing for efficiency, manage those expenses wisely, and grow strategically.
Now, we touched on risk exposure before.
Yeah.
Besides the ones we've already discussed, what are some of the specific risks that they're really focusing on?
Well, they're increasingly worried about those geopolitical risks.
Geopolitical.
Yeah, things like political instability, conflicts in different parts of the world.
Right. That can definitely impact the market.
Disrupt things, lead to unexpected losses.
It's a good reminder that everything's connected.
Yeah, what happens in one place can have ripple effects all over.
And then, there are the regulatory changes.
Oh, yeah. The insurance industry, it's heavily regulated.
Right.
Any changes in those regulations can really impact their business.
Their profitability, too.
Absolutely. So they need to stay informed, understand the regulatory landscape in every market they operate in.
It's a lot to keep track of.
It is. And let's not forget about pandemics.
Oh, yeah.
We all saw what COVID did.
Right. That was a huge disruption.
They need to be ready for that kind of thing. Potential future pandemics, global health crises.
So they're thinking about all those what-if scenarios.
They are. They got to have those contingency plans in place.
That makes sense.
The insurance industry is always evolving. New risks are emerging all the time.
It sounds like they have a good handle on it, though.
They do. They've got this sophisticated risk management framework,
Okay.
a whole team of experts who are constantly monitoring the situation around the world.
That's reassuring.
It is. Now, before we jump into their international ventures, let's take a quick peek at their financial statements.
Okay.
Those documents, they give us a really detailed snapshot of how they're doing.
Yeah, financial statements can be kind of confusing.
They can be, all that jargon.
But they're important, right?
Yeah.
If you want to understand a company's financial position.
They are. What should people focus on when they look at GIC Re's financial statements?
Yeah, what are the key things?
Well, first, look at the revenue growth.
Okay.
Are they growing steadily? Are their profits increasing? Are they keeping those expenses under control?
So it's all about those trends.
Exactly. And then take a look at how their investment portfolio is doing.
Okay.
How they're allocating their assets, what kind of returns they're getting.
So you got to look beyond just the numbers, right?
Yeah.
You got to understand the story they're telling.
Exactly. The numbers tell a story, and it's important to be able to read that story.
Okay, let's shift gears now and talk about their international ventures.
Okay.
We know they're a global player,
Mm-hmm.
but what are some of the specific initiatives they're pursuing around the world?
Well, they're actively seeking out opportunities in those high-growth markets,
Okay.
particularly in Asia and Africa.
Right, we talk about that.
Those regions offer a lot of potential for expansion.
So it's about expanding their reach, getting into new markets.
Exactly. And they're also expanding their product offerings
Oh, okay.
to meet the changing needs of their clients around the world.
So it's a two-pronged approach.
Right. Geographic expansion and product diversification, classic growth strategy.
Makes sense. Now, one of their most interesting international ventures is that GIC Syndicate 1947 at Lloyd's of London.
Oh, yeah, Lloyd's of London, that's a legendary institution.
Big leagues.
Right. It's like the granddaddy of insurance marketplaces, a global hub for all those specialized risks.
So what kind of risks are we talking about here?
We're talking insuring priceless works of art, satellite launches, massive infrastructure projects.
Wow, high stakes.
Yeah, even cyber attacks. It's that world of specialized insurance, high risk, high reward.
And GIC Re is fully backing this syndicate,
They are.
which focuses on property, agriculture, and engineering.
That's right. It really shows how ambitious they are, how they're willing to compete on a global stage.
It's a bold move.
It is. But it seems to be paying off.
They're making a name for themselves.
They are. And being at Lloyd's, it gives them access to this huge network of brokers, underwriters, clients.
So it's all about building those relationships.
Exactly, expanding that global reach.
So GIC Re is firing on all cylinders, it seems.
They are. They're performing well in their core markets, expanding strategically internationally, and managing those risks effectively.
They sound like a company on the move.
They are. And their success, it's really closely tied to the growth of the Indian economy.
Right, and their ability to grab those global opportunities.
Exactly. It's been a fascinating journey so far.
It has. And I'm eager to hear your final thoughts in our next segment.
Okay.
What are your key takeaways from our deep dive into GIC Re? What does the future hold for this reinsurance giant?
Stay tuned for our final segment where I'll share some of those insights and we'll wrap it all up.
Welcome back to the deep dive.
Yeah.
We've spent the last 2 parts really getting to know GIC Re, India's reinsurance powerhouse.
It's been quite a journey, hasn't it?
It has. We've talked about their history, how they fit into the insurance world, their financials, their global ambitions.
And even their commitment to social responsibility.
Exactly. So as we wrap up this deep dive, what stands out to you as like the most important takeaway?
You know, I think it's their unique role as India's national reinsurer.
Right.
They're not just another company. They're vital to supporting India's economic growth.
By taking on those really big risks.
Yeah.
Right? The ones that other companies might shy away from.
Exactly. Think about all those infrastructure projects, those investments that are driving India forward.
GIC Re is right there behind them, providing that safety net.
That's right. And they're not limiting themselves to India either.
No, they're making their mark on the world stage.
Absolutely. Those international ventures, like that syndicate at Lloyd's of London.
That's a big deal.
It is. It shows they're ready to tackle those really complex risks.
The ones that require a lot of expertise.
Exactly. And they're doing it strategically.
Not just jumping into anything, right?
Right. They're carefully choosing their opportunities.
Which is smart, especially with all the uncertainty in the global economy.
Definitely. Now, when you look at their financial performance, those numbers are pretty impressive.
They are. A really strong solvency margin, consistent profitability.
It speaks volumes about their risk management, their investment strategy.
It's like they built their business on solid ground.
Exactly. Prepared for the unexpected.
And ready to seize those opportunities.
Exactly. And we can't forget about their commitment to social responsibility.
No, that's a big part of their story.
It shows they're not just focused on profits.
They're thinking about their impact on the world.
Exactly. Supporting healthcare initiatives, rural development.
It's refreshing to see a company of their size taking social impact so seriously.
It really is. Now, here's what I find fascinating about GIC Re.
What's that?
Their success is so closely linked to India's economic growth.
It's a symbiotic relationship, right? They support each other.
Exactly. As India continues to rise as a global economic power, GIC Re is in a prime position to benefit.
They're riding that wave.
They are. And that makes me wonder, what does this mean for the future?
Right. What does the future hold for both GIC Re and the entire Indian insurance industry?
It's a question worth pondering.
It is. And it shows why it's so important to understand the bigger picture when you're analyzing any company or any industry.
That's what we try to do here on the Deep Dive.
Exactly. We hope this deep dive into GIC Re has given you some insights, maybe sparked some curiosity to learn even more.
That's what we're here for.
Well, that's all the time we have for today. Until next time, keep exploring, keep asking questions.
And remember, there's always something new to discover.
That's right. Thanks for joining us on the Deep Dive.
It's been a pleasure.